Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Robert Botkin, associate at Parker Poe, and Doug McKee, executive director of threat research at SonicWall. We're here to discuss how the cybersecurity threat environment is evolving, where the vulnerabilities are, industry consolidation, and how companies and federal government should approach planning. Gentlemen, it's great to have the both of you with us, and certainly there is a lot to unpack here today. Rob, let's kick it off with you and discuss the threat landscape more holistically, because all of these emerging technologies that the good guys are leveraging, the bad guys are leveraging as well, and it's only increasing the sophistication and the scale of cyber attacks.
Yeah, that's right. We are seeing AI being used in cyber attacks and ransomware as a service. So a lot of the traditional ways companies were protecting their environments have been put at risk just because of the agility at how fast some of these attacks can occur because these threat actors are leveraging these emerging technologies.
Yeah. And you brought up an interesting point, Doug, in your notes here that hackers are leveraging new exploit code within 48 hours. And the organization patch time or response to it is significantly longer than that. Where's the disconnect? What kind of technology they're using? What tactics are they using that are moving certainly quicker than enterprise can respond?
Yeah, absolutely, Jill. You're 100% right. And I agree with Rob too. Like one of the biggest things that we're seeing is the speed of threat actors. And what they're able to do is anytime you see what's called proof of concept code, it's just when exploit code is published on the internet, we're seeing that leverage as fast sometimes as 48 hours or 24 hours from the time of publication. And as you mentioned, there's a big difference there between what they're able to do leveraging it and the time it takes for organizations to patch. Small businesses on average are patching at something of 120 to 150 days. And that's a pretty big disparity. And as a result, that's making it relatively easier for threat actors. And as Rob was saying as well, AI is definitely playing a factor in that. But there's two other components to talk about as well. 90% of breaches often are due to misconfiguration or human errors. And so that also has a component to play. Combine that with older vulnerabilities. Our customer base is seeing anywhere from 5 to 10-year-old vulnerabilities still in these landscape for threat actors to leverage. All that combined is really creating a rich threat landscape.
Right. And a big part of it too is it's coming through identity vulnerabilities. I mean, that is the front line of it. And that's where you're seeing a big component of the breaches.
Yeah, absolutely right. Identity, cloud, and credential compromise still seem to plague the landscape pretty well. I mean, so in our SOC and our services, we see about 85% of what we call actionable alerts. These are alerts to do something about are centered around identity and cloud and credential compromise. And all of that, again, is just going into the speed in which threat actors are able to leverage these vulnerabilities.
Yeah. And Rob, we're seeing regulators, particularly in the EU, imposing tight reporting timelines and more robust data governance standards. Do you think overly prescripted framework is necessarily the answer here?
No, I don't. And a lot of the cybersecurity frameworks we're starting to see have very prescriptive requirements, like you're saying, where they require these specific types of controls that companies are to implement. And the FTC had some discourse between their commissioners about the updates to the GLBA safeguards rule and whether those updates were too prescriptive because it said, they required MFA or required certain password strengths. And those requirements are good today, but how fast cybersecurity is changing, the controls that work today are not always the controls that are best practice tomorrow. And the cybersecurity industry just moves, 100 times faster than the regulators.
Yeah, I mean, you also have the challenge too when you think about the composition of businesses, what their risk profiles are individually, whether they're small, medium, larger enterprises. Some of these framework requirements can be quite cost prohibitive as well. You might not even have the necessary talent in place to be able to address that. So it's not necessarily a one-size-fits-all solution in the world of cybersecurity mitigation either.
Yeah, exactly. So the NIS rules out of the EU flow down to those service providers that provide services to those businesses that are critical infrastructure. So even though your business might not fall into scope, those requirements may get passed down through contracts. And it's prohibitive for a lot of businesses to meet some of these requirements, to meet some of these data breach reporting turnaround times. So you start to see businesses get flexible with, what does it mean to discover a breach occurred? When does that happen? Is it when you understand there's data? What type of data is involved to be reported? So we're seeing companies start to get more flexible on that side.
Yeah. And Doug, I think part of the issue is too, as the technology evolves so quick and companies are, certainly in an evolving competitive landscape, they're looking to get internal and external facing product out there, leveraging generative AI as an example. Do you think companies perhaps are thinking too much on the product and revenue side and not necessarily putting as much credence into the risk modeling and cybersecurity side of the equation?
I think it's a challenging topic for companies, right? Especially small businesses. They may not, as you were saying, may not have the resources or the knowledge required to tackle some of these regulatory requirements. And I think that's why it's really important in today's threat landscape that you have a trusted partner and trusted vendor to work with to help supplement your workforce. Cybersecurity can no longer really be an internal problem. It's a boardroom conversation. And one of the ways to tackle this is to have trusted partners to work with and cybersecurity vendors in order to be able to do some of the things that you may not have the expertise in-house to do.
Yeah. Well, I mean, again, complying, I'm sorry, Rob, part of complying to that can also be, having these types of vendors as a backup for the company if you don't necessarily have the expertise, because when it comes to compliance, it's not something that's nice to have. It's something that's necessary. You can't operate without this.
Yeah, what I was going to add was those companies that are on the cutting edge and using generative AI have unique cybersecurity risks, but these risks are pervasive throughout the market, regardless of whether you're in high tech or manufacturing. Colonial Pipeline taught us that very quickly, that companies of all different industries are affected equally by cybersecurity attacks.
Yeah. Well, I mean, I don't want to say self-inflicted might not be the right terminology here, but because, think about what we've been through in just the past 5.5 years. You had this mass migration to the cloud, excuse me, virtually the world going into a hybrid environment overnight through the pandemic. You had a couple of, high profile elections thrown in there. So there's been the surface just has expanded, and enterprise, small businesses, medium-sized businesses have been tested in real time. So there's just there's a lot that has happened in the past 5 years, let's call it a decade, where, to your point earlier, the technology is just evolving quicker than the regulators can.
Yeah, absolutely. I think it's an extremely challenging environment, right? We see technology evolving day to day. And I go back to my statistic about 90% of breaches are due to misconfiguration and human error. Well, part of that is it's a challenge for technologists to stay on top of the changes in technology and the migration. And that's where it's even really more important to make sure that you're partnering and have services that are able to help you in that area.
So when you think about the cyber industry itself evolving, one of the questions I ask is, there's so many vendors. I believe it's 4,500 or 5,000 companies are considered cybersecurity companies within the US. Do you think this primes up the M&A space to be able to acquire that talent, acquire that technology, and that consolidation will allow for scale when you're getting these more nimble companies?
Yeah, absolutely. I think that we are going to continue to see a lot of acquisitions and consolidations through 2025 and all the way into 2026. And I think a lot of that is what you're talking about, is we have these smaller cybersecurity vendors that are specializing in an area. We can use generative AI as an example, but they have the talent in-house and they build that smaller company. And now you have these larger companies that need to implement things at speed, right? We've been talking about speed this entire time, but the speed of threat actors is actually driving the speed of innovation as well. And so when we talk about the speed of innovation, it's many times quicker for a company to go out and buy a specialist to add to their portfolio than it is to drum up an innovation cycle and start over. Now, I don't think that's going to stifle innovation. I actually think it's going to supercharge innovation as we require integrations in these companies to continue to use these products.
Yeah. And Rob, you bring up an interesting point too, that security incidences can be elevated during times of an M&A transaction.
Yeah. So there was a period that's still going on where during M&A transactions, we're seeing ransomware hit right before the deal can close. So somehow threat actors knew that there was an M&A transaction going on and sort of sat as a man in the middle, was able to lock up both party systems or one party systems. And then to get the deal to close, that is their leverage, is that this company wants to be able to sell, and they can't do that unless their systems are free from ransomware. I do think that the opposite side, though, of consolidation is single party risk, right? A fundamental concept of cybersecurity is redundancy. When all your applications are in a single suite offered by a single company, you consolidate into a single point of failure. So if that cybersecurity vendor is what you've placed all your eggs in that basket, CrowdStrike taught us real quickly that if you really consolidate and you rely on one company wholly, it can cause your business to go down for days, if not weeks.
Yeah, I think another thing, Rob, that we should point out is that it's a big cultural shift for organizations as well, where it can't be a reactive or a nice thing to have when it comes to cybersecurity, that it has to be more proactive, thinking about incident response plans. The entire model has to be rethought if it has not been already.
Yeah, third-party risk, fourth-party risk, right? Who are your suppliers using and relying upon? So if they go down, your supplier isn't affected, which affects your business, right? All those different derivatives of the risk are important here, just so your business can continue running for business continuity and disaster recovery, right? So incident response planning is key here.
Yeah. So, Doug, it sounds to me that zero trust policy, cybersecurity first when it comes to product development, when it comes to the culture shift, or any other way that the enterprise is thinking about how the model evolves, it really does have to stem from cyber first, privacy first, zero trust.
Yeah, absolutely. I think zero trust is a huge component to what businesses need to think about moving forward. And I think that services is another huge component, like I was talking about before. But I think that's what you're seeing a lot of in the M&A space. Is it's pretty undeniable that services is a huge part of the acquisition of these companies. And part of that does help to mitigate some of the risk of putting everything into one vendor, right? SonicWall back in 2023 acquired Solutions Granted to build out their portfolio in the MSSP space. And just last week, right, we saw Checkpoint and Zscaler do the same thing, where they're acquiring these services to add to their portfolio. And part of that, it just goes to show that the industry understands the need of the customers and partners of having those services available to help monitor these technologies and these threats, how these threat actors continue to leverage at unprecedented speeds.
Yeah, it almost seems as if when you go back to the M&A conversation, that the macro environment, the uncertainty won't even, I don't think it might be as impactful in the cyberspace as it could be on other sectors. This is something that you need to have business continuity. And I think as innovation drives forward, that having that cyber component could almost be, a selling point for the company.
Yeah, I couldn't agree more on that front. I think the macroeconomic uncertainty is really not going to play a big part into cybersecurity M&As in the next year or so. And it goes back to what I think you said, Jill, earlier in the conversation, which is security is not a nice to have anymore. It's a must have. As I said, it's a boardroom level conversation. It's a component of your business. Without cybersecurity, it's almost as impactful as not doing whatever your main revenue generating function is as an organization. You have to put it up there in that priority space. And as a result, I think you're not going to see much of a downtick when it comes to M&A in the cybersecurity space over the next couple of years.
Yeah, I mean, Robbie, if you look at the composure of public boards, you're seeing more cybersecurity professionals having representation on the boards. I also think it is a maturation within the space itself. CISOs who have either been in the position for a number of years or up and coming, and understanding how to address concerns to different types of audiences. You're going to address the board for buy-in certainly different than you would going to a product or revenue producing area of an enterprise, or if you're going to the C-suite or CFO's office, because all that risk, falls under that function now. But it's understanding who the audience is and how to get that buy-in across the board. You can't think of cybersecurity in silos anymore.
Yeah, exactly. So the cybersecurity is the keystone of most of these businesses now. So if you pull out that keystone, the rest of it falls apart. And that's why, like you're saying with supply chain attacks and with the supply chain in general, just if one of those key parts goes missing within that single business, it's cybersecurity, the product can't function, the business can't go to market.
And I like to, Jill, I'll add on to that. I think, when we talk about C-suites and we talk about boardrooms, one thing that's universally understood is dollars and cents, right? And when we think about cybersecurity in terms of dollar and cents, like your average breach last year was $4.91 million of an effective on a company, and that factors in all kinds of things. But downtime, for example, is one of those things that is factored into the calculator, that cost, reputation, all that fun stuff. And you wonder why certain businesses go out of business, and a lot of it has to do with they may not be prepared to take that hit. We're talking about a massive financial hit to potentially deal with a cybersecurity breach. And so, like what Rob was talking about earlier, it's a time where we have to be proactive, right? We can't be reactive. We must be thinking ahead of the game. We must be thinking about how are we going to defend against these attacks when they happen, not if they happen.
Yeah, well, I mean, think about it. If you're operating in the EU as an example, which most global companies do, if you have access to an EU citizen's data, right? It doesn't matter if the company is headquartered there or even has physical offices there. You need to comply to GDPR as an example. And you know the fines there, 20 million euro or 4% of your revenue, whichever is larger. Now think about it. I just did the numbers on this the other day with NVIDIA's latest fiscal year 25 that they reported. That would have resulted in a $4.14 billion fine. Right? That's the market cap of a Whirlpool, right? Two different companies, two different sectors, but Whirlpool having that brand recognition. Imagine getting fined the market cap of a company the size of Whirlpool. I mean, there are consequences, to not being able to comply to these standards.
Yeah, 100%. The benefit to NVIDIA is that they don't really have a ton of personal data, but all those other big US tech companies definitely hear exactly what you're talking about, because they've all been fined time and time again in the EU and continue to do business, sort of curtailing their business to fit within that. But all those big tech companies know cybersecurity is key to user trust and to continue using their products.
Yeah. All right. Appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.